Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M1M is the first global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we do these free mentoring roundtables every week. And these are usually our Thursday morning Pacific time affairs and whatever that translates into in your particular time zone. This is the 343rd session of the 1M1M roundtables. And all recordings are available on our YouTube channel, so you can go back and look at all of them anytime you want. If you're live tweeting the show today, please use hashtag 1M1M. And you can join us on Twitter at 1M by 1M and at Shromana. And we publish a lot of very rich content through our Twitter channels. And we also publish a lot of very interesting video content through the YouTube channel 1M1M Roundtables. And we will share some of that with you, some of the recent YouTube content today, around which we're going to have a few segments of discussion in this session today. These are the call-in instructions. We're going to have extended Q&A sessions today, and we're going to, people are still trickling into the room, but I will put the slide back up again later on in the program. But meanwhile, please start thinking about what questions you want to ask, what topics you want to engage on, because this is a roundtable. It's not a broadcast. We want you to participate. We want you to weigh in with your thoughts and perspectives and questions. So just to set some expectations before the entrepreneur pitches begin, we are on your side. This is a working session. We are here so that we can talk about your business challenges and strategize on how to remove those roadblocks so that you can move forward. Now, in the course of this discussion, you very well could be disagreeing with something I would say. That's okay. The venture is yours. I'm here to provide you with perspective, and it's really up to you what you do with that perspective, how you work that into your strategy, or you ignore it. That's really up to you. I can give you perspective based on my experience, but ultimately you are going to be the decision maker of the venture. Now, not all businesses can raise money. This is something that you have to remember because there are certain specific criteria of raising money. And not all businesses should raise money either. And raising money does not guarantee success. So please don't be obsessed with raising money out of the gate. That is not. Entrepreneurship equals customers, revenues, and profits. Entrepreneurship does not equal financing, even though the entrepreneurship media has mistakenly created this myth that raising lots of money is success. That is not success. If you follow our Debt by Overfunding series, you will see there are so many companies that have raised so much money and then went out of business, and the founders made no money at all in the course of that journey. So the other thing is, please ask questions. This is a roundtable. We want you to participate. We're going to start with Mufakir Ansair from New Delhi, India. Mufakir, please unmute your line and tell us what you're working on.
Yeah, hello, how are you?
I'm well, thank you. How are you?
Yeah, I'm fine, thank you. Yeah, actually, I have been working on a project for a while. It has been like 6 months, and I have been still working on the same thing. But right now, we are looking for, investors or something, because you already know that, we are, freshly graduated from our college. Though we have, good experience in the past, but now we are like, we can't sustain in the market like this, We have to work around the clock, but at the same time, you need to have some money to, make the thing live. So what do you suggest when you come at this point?
Mufakir, investors do not fund unvalidated businesses. It just doesn't happen that way. So we're going to need to, if you really want to be an entrepreneur, if you're a freshly graduated person from college and you're early on in your career, so and you're working on something, it's not really panning out, in that scenario, I would like to hear a little bit more about what is it specifically that you're working on. But besides that, just from a methodology point of view, I would like to tell you this, that you could very well do this on the side, start validating this on the side with a job. So perhaps the best path forward for you could be that you get a job and bootstrap with a paycheck.
Yeah, fine. That is totally correct. I understand what you're saying. But, we have already spent a lot amount of time and money on this thing. And, we have very good and efficient team. And, quite, speaking frankly that, we are, very positive and passionate about what we are doing right now. And let me be very honest that, the project which we have been working on is very rare as such. We haven't seen such kind of product in a while. And since we know that how IT industry is growing, our team and the people who are, working with us, encouraging us, and, the people with whom we do interact on daily basis, they're very quite sure that, this project is going to be a very, it is going to be huge success. But at the same time, we are looking for, someone who can, really fund us something so that we can sustain till,
Mufakir, people do not fund promises like that. People fund validated business ideas. So why don't you present your idea, where you are, what you've done, what you're trying to do, and I will give you direct guidance on how to move forward with it.
Oh, okay, fine.
That is, by the way, the structure of these presentations.
Yeah, let me come to what we actually are doing. We are making one app. It will be on Android as well as iOS, an app which will help you to connect with the customer care executives of a lot of companies. Suppose you are buying something. Say you're buying something from Amazon. At the same time, that you can find same kind of product from eBay or other websites as well. So what happens here is that you simply, you go on the chat, that application. You will search for the companies which sell that product. Suppose it is XYZ. You will put that name XYZ in that app. It will search all the companies which is selling that product. And you can simultaneously chat with all the companies which are, giving such kind of, which are selling those products. And instantly you will get all, the pricing and everything from that application. Not only that, if you have to buy, it is not only about buying. You have problem with your cards, you have problem with your banking, you have some problem in ordering food or something. This app will have all the companies listed there, and you can get real-time solutions whenever you want, wherever you want.
I would be very frank with you, Mufakir. I'm not at all convinced by what you're proposing, because if you look at how online support works, there are lots of online support products and workflows of how online support is handled. There are, very significant established workflows and established products that support that workflow already out there.
I do understand there are a lot of companies which are doing same kind of thing, but the only difference between them and us is that we will not have only one company listed there. Suppose I have to talk to someone from Amazon, I go on the site and I just chat there. But here we won't be having only Amazon there. We will be having eBay, Amazon, and a lot of other, e-commerce ventures. They're listed. From, this will help you in getting in touch with all kind of, companies who do similar kind of businesses.
But I don't need to do that. If I'm doing business with Amazon, I want to talk to the Amazon customer service rep and end the story. I don't want to. If I'm having trouble with something on Amazon's website, I don't want to talk to the eBay customer support person.
It's not about having trouble with the Amazon website. It is about your interest in buying the stuff from where you will get the best possible deal.
But that kind of stuff is not handled by personal customer support agents. That's handled by comparison shopping engines, which also is a whole category of businesses out there, and there are a number of them. People, if you are looking for a comparative deal, there are lots of deal sites, and you're going to go search in there. Mufakir, listen to me, okay? If you're here and if you're not interested in listening to me, there's no point being here.
No, I'm not. I am listening to you. What I'm trying to make you understand is that what we are actually doing is we are not only doing this comparison thing. We're not comparing anything. We are just giving you one-click solution for all your needs. You have problems
no, you're
with
not.
your anything?
But I'm telling you that you are not. You're not, because the comparison function of deals across different sites is not done by human agents. It's done by intelligent agents, done in software, and that kind of deal comparison is available out there already. So you have no value to offer me in that sense.
We are saying some real-time solutions. You bought something from Amazon, you have problem in that, we have a problem with that product. What you do is you simply mail them and you get reply. It takes you 24 to 72 hours to get a positive response. And what if you are chatting with them and you get instant reply? Instant response.
So that decision of whether to give 24-hour reply or 20-second reply doesn't rest with you. That decision rests with Amazon. Amazon decides how long, what kind of staffing they're going to provide. You're not going to provide the staffing to provide 20-second reply to Amazon customers. That is not your job, and Amazon will not let you do that. Apple will not let you do that. So I don't understand, what is your value proposition?
My value proposition is that, an app where you won't be having only Amazon listed there. You will have Apple, you will have Swiggy, you will have a lot, Microsoft, and all the companies listed there where, if you have any kind of, day-to-day basis problems, issues, you have to buy something, you have internet banking problems. It is just one app where you will get all the solution just on one click. You just have one search.
I come to your, let me understand what you're offering here. I come to your app and I can talk to customer support reps within 20 seconds or within 5 seconds at any of these companies, Amazon, eBay, Apple, Swiggy, whatever. Is that what you're offering?
Yeah.
Okay. Now, let's look at the back end of what is necessary to provide the service. Who is providing these agents? Are you hiring these agents and they're going to be on your staff?
No, it won't be our staff. These companies will be using our this platform to give, to solve their problems, to give, customer care.
But you're expecting that Amazon is going to staff a whole call center to man basically your requests at a 20-second delay. Amazon doesn't do that. Amazon has their own call center. They have their support practices.
We have already had conversation with a couple of companies in India, and they are interested in such kind of application. I did talk to a guy from Corporate 360, and he was like, if we do something like this, and they will be using such kind of app, so that it will lower their, they need not to take calls all the time. It is one of the easy way to connecting with customers.
I don't understand. If they have to staff the back end of this application, how are they not taking calls or chat messages?
Yeah, taking calls is not free of cost. I am calling you, I am paying for this. At the same time, why did WhatsApp become a success story? Only because, people need not to pay, they need not to pay for, their messages, their texts. You just have one good internet connection and you can use WhatsApp. You can message anyone.
Okay, so but if you want to chat with somebody on WhatsApp, there needs to be somebody representing that company on the other end, on the receiving end of that WhatsApp conversation.
That is our headache, how we are going to convince the companies who will take, these chats. We will convince. We have already convinced a couple of companies.
So what do you mean you will convince? My simple question is, are you going to hire armies of people who are going to answer these calls? Are you expecting Amazon to hire armies of people to support your applications?
They already have, army of people who do attend calls, who do have, all back-end support to give their customers. They do have these kind of problems.
Yes, but they're not relying on you to solve this problem. If Amazon decides they want to do a WhatsApp support that is a 20-second delay kind of mode of support, they will introduce that themselves. They're not going to, if they are providing the staffing, they're not going to depend on you to do this. So anyway, I think you are quite convinced about what you're doing. You believe in what you're doing. I don't believe in what you're doing. I don't think it's going to work. So I will just give you that feedback and take it or leave it.
Sure. Okay. Thanks a lot. Thank you.
You're very welcome. Folks, we're going to go to our guest, Eyal Levy, at this point. Please do not send me private messages. I cannot anchor this session and answer your private chat messages on WebEx. If you have questions and if you want to talk privately with somebody, send messages to Maureen Kelly, and she will try to help you. I can't take your private messages right now. Please have some, judgment. Eyal, you are up next. Welcome to the session. Eyal Levy, co-founder of Yogibo, is our guest today.
Hi, how you doing? Great to be here.
Good, great. Eyal, tell us about Yogibo. What do you do?
So Yogibo started 2009 with a new generation of beanbags, quite different than the beanbags we're familiar with. What makes them so unique is that they completely conform to the body with no pressure points. And, it's hard to explain the level of comfort, of course, until you try them. So we started with a line of beanbags. Initially, we thought just selling online and maybe through wholesale. But since the product is so tactile, we figured that in order to be successful, we need to have some, physical demonstration. So we opened our first retail store in 2010, and that actually
hold on, you're going too fast.
Sure.
How did you come up with this idea of wanting to do bean bags? I mean, there are bean bags in the market. Why did you want to come up with another bean bag product?
Well, actually, I didn't. That wasn't my plan. I was in the high-tech industry before, and then medical equipment. And, it's the whole idea came up when my wife was pregnant, and we were looking for something she can sleep on her belly. And we saw something with a stretchy fabric beanbag, overseas. And, we had, the first one, and my wife had a very comfortable pregnancy. And then after that, it was a piece of very comfortable furniture at our house, and everybody who tried it loved it, and people kept asking us to make them one. So we
So where did you get that one?
I'm sorry?
Where did you find that one? The one that your wife had a wonderful pregnancy on, where was that from?
Yeah, the one that we had was it was different than the products that we had today, but we found it in Israel when we were originally from.
Okay. So you brought it with you, but you couldn't find that kind of a product here.
Yeah, we relocated to the U.S. 10 years ago, and we brought it with us. And this is when people kind of like, love the idea of stretchy beanbag. We started to fill them in the basement. We hooked up with a company that makes the fabric. And this was just selling to, friends and people that we know, or some events in the area. Back then I was still having my day job, and it was just kind of like a fun thing to do. But the demand increased, and then we decided to take it to the next level.
So, the reason I thought your case study would be interesting for our audience is that we see a lot of e-commerce retail businesses, people who sell, mostly e-commerce companies who sell other people's products. However, there is, over the years in niche e-commerce, I am definitely seeing the trend that people are building their own niche brand that sells their own products. And yours is certainly a brand that you've created selling your own products. So, so I think this is this is an interesting case study for our audience to understand, who are thinking of niche e-commerce as the area that they want to go into. So I want to kind of double click down on the various aspects of getting this business off the ground and then getting some scale and so forth. So you said you started this in your basement. Now, there are a whole bunch of other elements of starting a business in your basement. For one thing, how did you design the product? Who designed the product? Did you copy the product that you saw in Israel? How was that? How did that all come together?
Right. So first of all, my partner who started the business with me, he is a textile engineer. So we had to come up with a different fabric, that would be much more durable and comply with all the regulations here. So we kind of like had to design it, and this is how the first kind of like line of products came about. We were still, that was kind of like the, sorry?
Where did you manufacture it?
So the fabrics came from overseas, and the filling the bags and assemble them, we did in the basement.
You did in the basement,
and that was only for the first few months, because after the demand increased, we had to move to another place.
And how much, so there is also the question of startup capital, right? Inventory financing. Since you were doing a physical product, you needed some inventory to get this off the ground with. How much inventory did you arrange for, and how much money did you have to put in to pull that inventory together in your basement?
Yeah, so I mean, again, this was the first few months, and it was we used our savings, and we put about $30,000. That was also to get the website running, for people that wanted to order online, and then we constantly used the profit that we had to get more working capital and get to the next level.
And how did you get the first orders? Were you selling online first, or were you selling, you said it's a tactile product and you wanted people to touch and feel. Did you do the store first, or did you do e-commerce first?
No, the e-commerce was the first thing. So we were doing, first events and, selling through to other stores, and then we, and this was just in the area because the supply chain of the product is so complicated. So that we were able to do only in our area, something we could deliver ourselves, because the product is kind of massive and shipping it is very expensive and kills the margins. Later on, we had to develop a whole, supply chain system and infrastructure to be able to support the growth.
And you're talking, when you're saying your area, you're talking about a suburb of Massachusetts, so a suburb of Boston, right? Yeah.
Right.
So, so how did you build the brand? Talk a little bit about, before we get to the scale, I would like to talk about the supply chain and the logistics of scaling, but let's talk a little bit about the brand, which is how you generated the demand. So tell us how you built the brand.
So building the brand was mostly through a lot of events and partnerships that we created. We participated in a lot of events, music festivals, video game, Comic-Cons. We had great partnerships with TEDx, where, we had our products kind of like being the sitting option for people to just chill and listen to the talks. So that was big marketing component. The other one, of course, is we did a lot of online marketing to support that, but we were able to target the people that had the offline experience and capture them online. So the combination of the offline and online was a winner. And if you were to say that this brand had a certain reach, through these events and so forth, what would that be? You're saying local, right? You were doing events locally, you were selling locally through local stores. What kind of reach are we talking about? Well, in the first couple of years, the first year, let's say until we opened our first store, I can estimate that we attended events that about 500,000 people attended.
That's pretty big.
And, yeah.
And so this is something that, you know, for the audience I would like to underscore is that niche brands get built through niche means. You know, whatever it is, wherever you want to position your brand, and in Eyal's case, it's a brand that required touching and feeling. So these events allowed the exposure through which he generated this touching and feeling experience for the consumers, and with that, they were able to touch 500,000 people. That's not trivial. That's a great start to getting a brand off the ground. So yeah, talk about how you, so how many stores then, to support this 500,000 people, how many stores are we talking about?
No, that was the first year. That was with probably one store, but it was a lot of hustling. You know, it was a lot of hustling of, you know, going every weekend. You know, I did it myself, you know, so it was like really working 7 days a week, and in the weekends going to those events and having, you know, the people that work with me go to other events. So New England, especially from May to October, has plenty of events. Fairs, music festivals, everything. So it was just making sure we're hitting the good ones in each one of them.
All of the good ones, yeah. And the one store that was fulfilling your orders besides the e-commerce was your own store, or were you still selling through other retailers?
No, so I mean, selling through other retailers was fairly small portion of the business. We opened our first retail store in one of the upscale malls outside Boston, and it was our own store, and we were able to give the entire experience. And, you know, the beanbag started as the main thing before we opened the store, but then we understood that, you know, just with the beanbags we can't be successful, and it's just not enough products to support the model. So we developed and designed more products, and we launched more products to kind of like build a whole lifestyle brand around it.
And what kind of price points are we talking?
So our products range from $5 to $500. I mean, our flag product, it retails for $239.
And that's the beanbag.
One of them. That's
one of the
max,
beanbags.
which it's kind of like the biggest individual one.
And in the first year of the 500,000 people that you touched through these events, how many converted into paying customers?
Whoa. I would say about 10,000.
10,000. That's
but
great.
One of the things that you know, especially with a product like ours, and especially with the big products that we had in the beginning, is that it's not so much of an impulse buying. It's something people try, and they don't always have space in their house for it. So we had a lot of people like years after said, hey, we saw it like 2 years ago and we loved it, and now we have, you know, the basement, and now we have the space. So it's something that really builds up and needs a lot of patience.
Yeah. So talk about the complexity in the supply chain. What was complicated about scaling this, and how did you address that?
So first of all, our main products were oversized. You know, in the U.S., everything that has the girth of over 130 inches considered oversized, and has a lot of, you know, or high oversized freight charges. So, you know, we ended up, you know, just sending an hour away for end customer with UPS or FedEx, even with deep discount, over $100. So we decided to, in order to be successful and support the online sales, you know, we had to deliver the products ourselves. So nobody would pay, obviously, shipping charge of $100. So it's not something we could charge. So, you know, we took the profit in the beginning, and we actually, you know, bought vans and a truck, so we had drivers and we could deliver the products ourselves. And that was in the territory that, you know, obviously around us, we couldn't send a van to the West Coast, but we were still sending the rest of the U.S. And, you know, having very small margins.
So the e-commerce business was a Pan-American business.
I'm sorry?
The e-commerce business, you were selling all over the United States, and that's where the margin problem was happening.
Yes. I mean, some people went to those events, you know, visiting New England, and then came home back to the West Coast and did order online, but the majority was from in the territory where we exhibited the product offline.
So how did you start opening, you know, service centers or warehouses in other parts of the country?
Yeah, later on, not, you know, years after. So we expanded the territories, and you know, our model is built of territory, which it consists of a warehouse where we store and fill the bags, and also store the rest of the accessories and smaller items. And from there, we ship to our stores around and also do the home deliveries.
And what is so how long in your cycle of development did you stay within New England, for instance, that you could service from your one warehouse and delivery network?
That was the first 3.5 years.
And what kind of revenue level did that get you to?
It got us to about $5 million.
$5 million. See, there is a big lesson for those of you who are listening, and especially those of you who may venture into something similar to what Eyal is doing, is that, you know, logistics and focus on a particular regional area for a product that is cumbersome, and we have done case studies of mattress products and, you know, large products that have something custom, something special, something differentiated about it. This is going to be a decision that you're going to have to make, and we constantly see entrepreneurs who have the instinct to want to boil the ocean. They want to sell to the whole world right away, and they don't want to make these trade-offs. But that's a very good way of going out of business. I don't think Eyal's business will be successful without those smart, judicious choices, right?
Yeah, I mean, like every business, it's important to, I mean, beside IP and patent that we applied, and it's important for every business to make it different and to set the entrance barriers. Because without, I mean, our entrance barriers is the complicated supply chain and, of course, the combination of offline and online. And it's something that online resellers, you know, for somebody to come up, even if they figure out like ways to pass the IP or things like that, for them to start something like that just online would be extremely difficult. And, you know, today I'm meeting with a lot of entrepreneurs and kind of like trying to help as much as I can to people starting online businesses and e-commerce businesses, and you know, they need to find a way to differentiate and, you know, to set the entrance barrier so they have the value proposition, and to have something that is unique and something that other people will be hard for them to compete with.
And in your case, is the entrance barrier entirely the logistics and the delivery network, or is there product level differentiation that you have also used to compete?
The product level, definitely. I mean, we were getting a lot of requests from distributors all over the world, and we didn't talk about it, but we did open distribution overseas. And for potential distributors that are interested in just selling the beanbags, I'm telling them, you know, you're wasting your time, because it's not enough to make money in the model. You need to have all this line of product in order to make it profitable and be successful. So yeah, the line of product is definitely the technology that is, very hard, and we invested a lot in it. That's another.
What is in the line of product? Besides the beanbags, what else do you have?
Oh, so today we have about 1,000 SKUs, and we're launching 200 more SKUs. So after the beanbag, we expanded into more comfort products that each one of them is unique and is different than any other product in the market. So whether it's unique travel pillows that have advantages, or laptop tray and tablet pillows and meditation pillows that are all unique, and then we expanded to other comfort products like blanket that is, very different, all seasonal blanket, and now sleeping pillows. And now we're getting into a whole section of lifestyle with fashion accessories that are unique, and other different home decor products.
And so you said in 3.5 years you got to about 5 million. What is the rest of the growth trajectory of the business? What kind of growth and what kind of level of revenue have you traversed? So
yeah, we expanded obviously with online. The business expanded, so we invested in better e-commerce technologies and selling through a couple of online resellers. We then expanded internationally to other countries like Japan and Korea and Canada. And right now we're launching our franchising program next month. And to kind of like duplicate the model as it proved to be successful in the East Coast or Northeast and Mid-Atlantic to other territories of the country. So we've been building the franchising program and provide the franchising for an entire territory, not just for stores, but the stores, online, and the entire model. So this is what we're basing the growth on, and also continue to launch more products and increase revenues with the existing channels that we already have.
How many years has it been that you've been in business now?
I'm sorry, how many?
Years has it been? When did you found the company?
Yeah, so 2009. It's going to be in July. It's going to be 8 years.
8 years. And where are you revenue-wise at this point?
We're approaching, 20 million this year.
That's fantastic. And all organic growth? Did you take any financing?
We did a little bit of financing, a little bit of equity, a little bit of mezzanine loan.
And do you use bank loans for the inventory?
Yeah, we use line of credit for the working capital. Yeah.
And what would that amount to? How much equity financing do you have in the company, and how much? You're saying little bit. What does little bit mean?
It's not something I can share. It's some confidentiality, so it's not something I can share. I'm sorry.
So what we are trying to understand, you can answer it whatever way you can and are willing to. We're trying to understand is this a capital efficient business? Is this, anything that can be inventory finance, and you get to a level of, stability in the business and enough transactions such that banks or inventory financing companies are willing to lend you that money and that line of credit, are actually easier to scale. But to get there, you kind of need some amount of financing, either that is your own financing, friends and family financing, whatever, equity financing, debt, whatever. That's the part that we are trying to understand, is how did you finance that part that got you to the financials based on which you can start the bank financing flowing.
Sure. So I think, in our business, like other stages of business, any business that starts, and, at least in the U.S., will go to the bank to ask for a line of credit. Probably, most likely the answer will be no, because it takes years of profitability to get to that level.
Get there, yeah.
So the cycle of us was, we started, used all of our savings to get to the level of that we can, finance the inventory and get the ball rolling, have a very basic e-commerce website that I built myself with a designer. And then, you know, once that got going, you know, in the first couple of years, you know, I barely took salaries and used all my saving and working, you know, at least 80 hours a week to save payroll and put all the profits back to the business and create more working capital. And then, you know, it depends. For us, you know, when we needed more money is when we decided to open the first store, because that's something that required capital, not just working capital, but capital of renovating the store or deposit or whatever it is. So we used some, you know, seed money, you know, a couple of $100,000 to be able to do that. And for years, we were just taking, like, putting all the profits, running very, very lean, and putting all the profits back to the business until we show at least 2 years of profitability that we got the line of credit from the bank to support, you know, line of credit normally is, you know, 50 or 60% of inventory. Continue to grow that, increase the profitability, and then we're able to get to, you know, mezzanine loans that, you know, normally mezzanine loan, we're talking about like $1 million.
Yeah, so that's, by the way, the key points that you need to manage from a cash flow point of view is to get yourself to a level, in e-commerce in particular, where you can work with banks, and that really gives you a lot of leverage. If you can get to a financial, you know, a P&L and a track record based on which banks are willing to now partner with you and give you lines of credit, that's one of the key points of an e-commerce business, and it sounds like it took you a couple of years to get there.
Yeah, and the first 2 years are so crucial, just to run as lean as you can, make it profitable as fast as you can for 2 years so you can show the bank, build a relationship with the bank, build collateral if you can, of course, other than inventory, and, you know, to support that securities that the banks that run so conservatively need.
So now, last question, Eyal. Where do you want to go now? You have $20 million, approaching $20 million in revenue. What are you thinking? You know, the companies at your stage have a lot of options. You could take private equity financing. You could sell the company to private equity. You could, you know, there are all sorts of options. What is your desire at this point?
The desire is continue to grow the business and to expand it to other territories and to expand the line. I love what I do. You know, whether we will need more financing, it really depends on the future. Right now, we're building a strategy that we won't need much financing unless other opportunities come up, or maybe the market will change. But that's kind of like the overall strategy: continue to expand and get to other markets internationally and domestically.
Do you need liquidity personally, or do your investors, the equity investors, do they need or want liquidity?
It's a good question.
Because you do have the option of taking partial liquidity with a private equity firm at this point.
Yeah, I mean, we will. Right now, we're focusing until like next year to get the profitability to the next level, and then we'll have the options open, so it's something we can be open for. But right now, we're focusing on, at this point until next year, we're focusing on building the business and expanding.
Fantastic. Well, thank you for sharing your story. And we're going to move to the next segment of the business. Folks, if anybody actually want to use public chat to ask questions of Eyal, please go ahead. This is you know, now is a very good time to ask questions. We're going to do other things in this session, but while Eyal is still on the call, if you have questions, you should go ahead and ask him. Anybody? Eyal, do you want to add anything to what you said? Do you have any message that you want to convey to this group?
Yeah, I just, you know, anybody who starts a business, I mean, need to be ready for a lot of sacrifices. You know, when I'm being asked, how is it to start your own business and to scale it up. I'm always saying it's like running a marathon in a sprint pace, and just be ready for a lot of sacrifices and try to stay as lean as you can until you make it profitable, until you make the tipping point. Think out of the box, create your entrance barriers, and think different. Think of things that, others can do.
Great. So we're going to Eyal, thank you very much for sharing the story.
Thank you for having me.
We're going to move to the next segment. You're very welcome. Folks, we're going to move actually to a few video segments. We're going to talk about some, lessons that I want you to take away from, what we have learned through our work, and we're going to basically share a few video segments with you next. So the first lesson that I want you to take away is ownership matters in how you build your business. And if you try to raise money too soon, you don't build strong businesses. And let's look at this video of how did Mark Zuckerberg preserve 26% equity in Facebook. Maureen, please start the video. So folks, I want to highlight a point that I was trying to make earlier also in during the presentation. If you have expectations that you're going to be able to raise some money very early on with no validation, you haven't really done any of the groundwork that warrants a good round of funding. And what is a good round of funding? A good round of funding is when you have real proof points, you know, something that smart money would be interested in participating in. Then what you end up with is very poor cap tables where you have dump money taking away, you know, we see crazy deals. We see 51% for $50,000 investment in a first round financing. And by the way, if you do something like that, your cap table is destroyed forever. And it will be very, very difficult to raise money later on in the game. As a thumb rule, I always advise entrepreneurs to figure out some way to get to a $2 million pre-money valuation. And there are many, many, many ways of doing that. One of the ones was what I was advising earlier during the entrepreneur pitches, is you can use bootstrapping with a paycheck. And bootstrapping with a paycheck is one of the tried and true ways of validating to a point where you can raise a first round, seed round, with reasonable terms and a reasonable cap table. So this is something that, you know, we want you to take away and put into practice in your entrepreneurial ventures. Folks, do you have any questions on this particular video, on this particular topic? Anybody? All right. We're going to move to a second video, which is your startup versus heavily funded competitors. Maureen, if you could run the second video, that would be great. So folks, the reason I want you to take this message to heart is because we have case study after case study of entrepreneurs who have successfully competed and won against very heavily funded competitors. And what helps them do so is by really focusing on execution, capital efficient entrepreneurship, really focused on very, very tight, lean execution. There's a tendency in very heavily funded startups to waste a lot of money. They don't validate, they don't necessarily focus on fundamentals, they just throw a lot of money around and look for what sticks. And that often results in debt by overfunding situations, which then leaves the competitors who are capital efficient, focused on fundamentals, and executing well as the winners. And we have actually, even in these roundtables, we've had guests who have, Eyal Levy, by the way, was a guest at a previous roundtable, so you can go and look at the interview session with him. but we've had Hotel Planner, that's another company that did exactly the same thing, you know, won against competitors that were very, very heavily funded. So we know a lot of entrepreneurs who have done this very successfully, and it's something that is going to continue to be the case just because there's a lot of money sloshing around in the industry, and there's a tendency of certain entrepreneurs to believe that entrepreneurship equals financing. So they go and raise a lot of money, then they go and waste a lot of money, and they end up going out of business. So if you follow the capital efficient, fundamentals-oriented approach, you may just end up the winner because they're going to follow this indisciplined, haphazard approach. Questions, folks, on this topic? Anybody? No questions? Nobody has any questions? That's odd. No questions, no comments, no thoughts, no perspective. That's kind of boring, isn't it? All right, let's do another video, Silicon Valley versus your hometown. So this question we get all the time is, do we need to move to Silicon Valley to build a successful technology company? And our answer to that, at least 1 million by 1 million's point of view on that is, today you don't need to move to Silicon Valley to build a successful tech company at all. And as a matter of fact, if you get to a certain level of validation and traction, you can raise money from Silicon Valley even if you're elsewhere. You can't do that if you don't have validation, don't have traction. But if you get to certain levels of success and certain levels of proof points more than anything else, then you can actually build companies from anywhere, and even Silicon Valley investors would participate in those rounds. So that's the point I wanted to make for you in the Silicon Valley versus your hometown video. Don't pack up and move to Silicon Valley right away, because Silicon Valley is very expensive and it's really difficult to sustain yourself here in the early stages of a venture. The other thing that I want to make before we start the next video is please use the public chat. If you're asking questions or making comments, set your chat to send to all participants. That way everybody can see it, and it's the easiest way to dialogue. Okay, let's do the Bootstrapping a Unicorn Startup video, Maureen. So the other myth in the business, in the startup business, technology startup business, is that you bootstrap if you want to do something small, but to build a big company, you need venture capital. Obviously, the case study that you just saw, Zoho, doesn't fit that bill. Zoho has the option of raising money. It has chosen not to raise any money. Sridhar Vembu doesn't believe in financing and doesn't need financing. So we actually have nothing against financing. We are perfectly happy to help you raise financing if that's what you want to do. But don't raise financing gratuitously, and definitely don't raise financing and then go through a debt buy over funding scenario, because part of the problem is investors, once they put in money, have expectations of hyper growth. And especially in the early stages, it's not always easy to meet this hyper growth requirement. So you have to kind of slowly put your one foot before the other. Zoho has been around since 1999. This is almost 18 years into the game. But, you know, today they are free. They are generating immense amount of revenue, immense amount of free cash flow, profitability. You know, they generate over $100 million in profits. So they don't need any financing. When you have that kind of profitability, you can self-finance organically your growth, and you don't really need investors. And not having investors has its advantages. So that's, you know, this video I wanted to present mainly to make the point that you can comfortably, not easily, it is not easy to build any business, financed or not financed. It's a very difficult thing actually to build a successful business. But you can build large companies without outside financing, and that's just the point that I wanted to make here. So we'll do a last one. Can you bootstrap a unicorn startup with your paycheck? And then we'll get back to Q&A. So again, you know, wanted to debunk a myth. The industry, especially the incubators and accelerators in the industry, all believe that you cannot, you know, build a company unless you quit your day job and commit full time. But actually there's been a lot of studies which show that entrepreneurs who started conservatively while holding on to their jobs, working nights and weekends and starting to validate, actually there's a higher rate of survival just because you don't run out of money. And again, you know, the early stages of building the first $1 million of building a business where you get enough validation, where you navigate all the experiments that you have to do, all the trial and error process to get to product market fit can be very long. You know, it could be 6 months, it could be 18 months, it could be 36 months. And if you quit your job, then you have to finance this long journey out of your own pocket, because it's not a time where it's easy to get financing either from elsewhere. So you heard Eyal talk about the first couple of years when he didn't have the bank financing viable yet, and he had to build up to a level of financial such that banks were willing to work with him. All these navigation elements are really critical in the early stages of the journey, and you're going to need to find ways of staying alive during that period, and bootstrapping with a paycheck is one that we have found to be a very pragmatic and reasonable way of doing that. So those are, some of the tips from today's session. We will take questions. While you are lining up your questions, I'm going to explain to you how to use 1 million by 1 million. And before that, if you like what we are doing here, please refer serious entrepreneurs to 1 million by 1 million. And the reason the word serious is in bold is because you really have to want to do this. It's hard. Being an entrepreneur, being a successful entrepreneur is really, really hard. And you're going to have to make a lot of sacrifices and, really be patient and resilient. So only serious entrepreneurs have that capacity to do that. The fly-by-night ones don't make it. They'll, futz around for 3 months, 6 months, and then go back and get a job. So, and getting a job is okay if you're willing to, do the nights and weekends of further work to build the business. But if you quit, you quit, and that's the end of your entrepreneurial journey. So, in terms of resources, we will be with you. If you chose to work on a venture, and if you want to have us as your acceleration partners, we have a lot of resources that we put at your disposal. Everything is at 1mby1m.com, by the way. The blog series is free. You can follow the blog and learn a lot through the blog. All case studies are available on the blog for free. The Entrepreneur Journeys book series is 12 volumes of books. You can learn a lot from these books. There are 12 to 16 case studies each, double-clicking down on each of these topics. And one of them is bootstrapping with a paycheck, because we've found it to be such a useful mechanic in navigating the early stage journey. These roundtables happen every week, and you can come here, discuss your issues, you can pitch your strategy, we'll talk to you about your strategy, and if you're willing to listen, some people are not willing to listen, if you're willing to listen, we can actually come up with meaningful next steps. And then we have the full acceleration program, which is the 1M1M Premium program, where we offer you extensive methodology guidance. We have a full online curriculum. We help you with business development. We have active strategy consulting on your projects in our private roundtables. And if you're working on a fundable business and you want to seek financing, we will help you with financing as well. And finally, we have a lot of clout in the media. We can get the word out about your business and your product, your service. So that's another part of the premium program. We do recommend that you look at the 1M1M self-assessment. It's a very, concise set of questions, strategic questions that you need to answer. You have no choice. You have to answer these questions to be a successful entrepreneur. And these are questions that investors would ask you. The reason we want you to ask these questions is that you are the first and most important investor in your own venture. So you need to really, get your ducks lined up around these questions. Now, if you are having methodology gaps as you're trying to answer these questions, like there's terminology that you don't understand, methodology that you don't understand, you can go to 1M1M Basic, which is our curriculum-only option, $99 a month, and go study the curriculum, and that will also, help you plug those methodology gaps at your own time. This doesn't come with the private roundtables and the personal coaching and all that, but you can listen to the lectures, study the case studies and everything, and you have full access to the curriculum. In 1 month, if you're willing to put in 100 hours of study, you will have made a huge amount of progress just through the curriculum. And that's fine also. So dig around on the website. There's a ton of information about what to expect from the premium program, the basic program, lots of video FAQs, etc. See if this program is for you. It's a self-learning program with roundtable coaching on your projects. So that's the format. If that format works for you, you're most welcome to use the program. But if you're not comfortable with self-learning, if you need a lot of hand-holding, this is probably not the program for you. You need something else. And the program is case study based. We have had over 750 successful entrepreneurs participate in developing the curriculum with their case studies, with their inputs, with their interviews, perspectives, strategies, etc. And so we have a very, very comprehensive case studies set that have embellished this program to be really meaningful and inspiring. And you basically get the experience of sitting down and having coffee with hundreds of successful entrepreneurs, including 50+ unicorn entrepreneurs, 400 heavily venture-funded companies, 300+ bootstrap startups. The methodology is lean, capital-efficient bootstrap startups. Even if you want to raise money, you're going to need to navigate your way to some level of validation such that you can attract financing from the right kind of people, not dumb money, smart money. And dumb money is a tremendous headache. I caution you against dumb money. It screws up your cap tables. It gives you a set of investors who are going to drive you crazy through the journey. And finally, as I said, we have a lot of PR clout. We can help you get the word out there as well. So all three following Thursdays in March, we have roundtables. Please feel free to book your slot and come and pitch. Line is open right now if you want to call in and ask questions. I see a question from Pawan Mirchandani in the public chat. Shravana, what is your advice on choosing between offline sales versus e-commerce for the launch of a product? Bulky, somewhat touch and feel driven, but not totally. What should be the key things taken into consideration to make this choice? So Pawan, were you here when Eyal was on the call? Yes. So you've heard that perspective. It depends on what is your product. Can you describe your product in brief? And what geography are you selling it in also is another question. Photo frames starting in Nashik, India, okay. That's actually, photo frames probably are a lot less bulky than the size of product that he is talking about, right? He's talking about bean bags. These are huge life-size bean bags. Your product, I think, actually can be showcased reasonably well through e-commerce. So if I were you, I would start with e-commerce because, doing physical locations and all that there is overhead to that. You can start an e-commerce site with a much lower level of investment than actually a physical site. But the strategy of going to exhibitions and showing off the product physically somewhere and then having people order online, maybe you just have your iPad right there and you can take orders at different exhibitions. That may be a good way to launch the product. And even for shipping charges, stunning photo frames and logistical complexity, photo frames are not as complex as shipping bean bags. So I think this is something that you can do as an e-commerce product with some level of, pop-up presence at different events perhaps. And by the way, this is the kind of thing that you could position into certain niche segments like weddings and so forth, and that would have a different go-to-market strategy. I would explore different go-to-market strategies for that as well. Local versus global, that really depends on the channels you're going to pursue and what arrangements do you want to make. How differentiated is the product? What arrangements, do you want to make in terms of shipping and so forth, and how much inventory do you want to take. So there's a whole set of decisions to make there. If you, for example, if you sell through eBay or Etsy or Amazon Marketplace, and you make some sort of an arrangement to ship in the US with a small amount of inventory, that could be a way to test the US market. But again, it depends on how differentiated is the product and what would people be looking for. So the thing is this something people are searching for? And if they search for it, are they going to find you? Or are you differentiated enough that they will find you and want you, versus something that is more commodity? And this is where I need to look at your business a lot more closely to be able to advise you more specifically. There may be actually other more specialized go-to-market strategies that I can come up with that will be more cost-effective once I see your product and business. Anybody else? Any other questions? This is exactly the kind of conversations we should be having is, your particular situation, what are you dealing with, what kind of questions do you have about your specific situation? Folks, if you have questions, by the way, about the 1M1M program, feel free to contact Irina Patterson. She's on our team, Irina at 1mby1m.com. She's very patient. She will, answer whatever questions you have. Anybody else? Questions, comments, introductions? This is a good time to network. If you want to introduce yourselves and tell us where you're joining from, that would be great too. What are you working on, where you're joining from, who you are? Anybody? All right, I don't see any questions. We've covered quite a bit of material today, so I hope it was helpful. And by the way, all the videos that you saw today are available on our YouTube channel, and Maureen has put the YouTube links. So feel free to go back and revisit them, because, each of them are thoughtful, very pithy, but thoughtful, and actually quite deep messages, lessons from the startup universe, and hope you'll find them useful. Thanks very much for coming today, and I hope some of you are going to pitch next time and we can have more extended conversations on your businesses. Bye-bye.